Testing. There's some issues. Looks like some issues with YouTube today. Um, so the broadcast is delayed. This is going to have to be very brief. I have to be out of here in 10 minutes. Good morning, everyone. It is 8:05 a.m. Chicago time on Thursday, the 2nd of March, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall um, the overall uh, market stance right now is mixed. The dollar is still is strong yet again, trading at 102.125, up 34 basis points, followed by the Nasdaq. Pretty much everything is just around break even, with the euro, Japanese yen, and gold lower, and crude oil much lower. Crude oil is down 2%. Um, Down about 2% at 52.73. Crude oil is actually doing something interesting. It's breaking below the shelf it has put in over the last few weeks at 53.23. So looking for volatility to continue there. As far as what news flow there is, we've had a couple of items released this morning. Eurozone January unemployment rates at 9.6 in line. It's the lowest since May of 2009. Initial jobless claims came in very strong, the best since 1973. Continuing claims 2.07 million. If you can't get a job out there in the U.S., then something's up, because this is as good as it's been in the last 44 years or so, as far as claims. Um, Other than that, looking at what's on deck today, we're pretty clear all the way to EIA natural gas at 10:30, expecting -3. And then we just don't have any releases. We do have a Fed Speaker Powell coming on CNBC at 11:15 p.m. a.m. Central Eastern, 11:15 Eastern, and at 2:30 we have ECB Speaker Lautenschlager speaking in London, and that's about it. Let's race quickly to what we expected yesterday. Here's the primary hypothesis for yesterday. The expectation is that the market would not close the gap. This is the normal action by the market recently, um, and for it to keep a gap zone open, I was looking for about 10 to 12 points up. I assumed that we would at least move down a little bit and test lower, and then I based the range from there. So I expected the range to go up to about 23.90. It actually pushed all the way through and through there. Um, and so there you have it. That's the hypothesis that actually worked without the pullback. The gap zone remained open. I put this arrow here to show that the gap zone is wide and it's likely to stay open, and it did. Hypo 2 was for a failed attempt higher and for it to regress back. Still leave a gap zone open, but for the market to pull back somewhat. Hypo 3 is failure through the gap. Market that's overextended, failure through the gap and pulling back down to the MC point of control. Hypo 1 also predicted a closing sell-off, which we did get. Okay. As far as what we got, so here's where we went. We went to 24.01 and failed right back off. The market closed below the point of control and had a pretty good rotation down. We rotated down about 9 points. As far as the overnight session is concerned, not much to talk about here. Volume is pretty low in the overnight. 186,000, higher than normal, but lower than the last few nights, with a profile that's completely Gaussian and balanced. This last big rotation up is the biggest rotation of the night, and it hasn't really gotten us anywhere. So this past rotation, as long as it holds 23.92, then we're likely to see a push higher on the open. As far as what we're looking for today, let me remove for those of you who get the flex levels, you should have seen the gap zone put in. That's a very large gap zone. When I zoom out here and you look at the different gap zones, you'll see that there are just a lot of gaps below us, a lot of incomplete auctions. Okay, so I guess I'm being dropped here. Anyway, pushing through. The primary hypothesis this morning, the expectation is for the market to push higher into 96.50 to go down below, find a base, and then I'm looking for a retest 24.01, and I'm looking for this to come back and close in the middle of yesterday's rally. That's hypo 1. Okay. Hypo 2, uh, for the market to pull back, this is a very tight range overnight, so the overnight stats likely to go away really quickly. Hypo 2 is looking for a uh, an immediate attempt higher, and then for the market to fail to push through the 98 area. 98, I'm expecting to have a fair amount of resistance up here. And then I'm looking for it to push lower and down into the 2385 area just to tackle the opening swing and this lower consolidation zone later on. That's hypo 2. Okay, so those are your two hypos. I know uh, I'm breaking up during the broadcast, but I'll post these images online as I get to the office. For now, I need to run. I need to keep this short. Again, as always, you're here to trade your plan. If your plan does not materialize in the market, don't trade. Just stand by, conserve your capital for further opportunities instead of just jumping in head first and finding that you've run out of money. Good luck today, and I'll catch you tomorrow. Take care.